Welcome to Finance Deep Dive. In this video, we're going to pull back the curtain on one of the biggest events in a company's life, the initial public offering, or IPO. We'll look at how a company goes from being private to being traded on the stock market and, what that actually means for everybody.
All right, so let's dive right in. You hear this term thrown around all the time, right? A company goes public. But what is an IPO, really?
At its core, it's pretty simple. An IPO is the very first time a private company opens its doors and sells shares of itself to the general public. It's their big debut on the stock market stage, a way to raise some serious cash.
Now, going from private to public isn't like flipping a switch. There's a whole process involved. So how does a company actually make that leap?
Well, it's a journey with a few key steps. First, you've got a private company, owned by a small group. They decide they need more money to grow or pay off debt, so they choose to go public. That's when they team up with investment banks to figure out how many shares to sell and at what price. Then comes the big day, the IPO launch, and boom, the shares are on an exchange like the NYSE or NASDAQ where anyone, including you, can buy and sell them.
Okay, theory is one thing, but let's put some numbers to this to make it, well, a little more real. It's always easier to see how the money works. So let's cook up a quick example. Picture a cool tech company. We'll call them TechX. They're doing great, but they want to get way, way bigger. To do that, TechX decides it needs a huge cash injection. Their target? A cool $100 million. So, how do they get there? They decide to offer 10 million shares of the company to the public for the first time.
And the math is pretty straightforward from there. They set the initial price for each of those shares at just $10. 10 million shares at $10 each, that gets them to their $100 million goal.
We've seen the what and the how, but let's talk about the why. Why does this whole IPO thing even matter? What's the big deal for the company and for investors?
It really comes down to a mix of big opportunities and, big risks. For the company, it's a game changer. It means a ton of cash to expand. For investors, it's a chance to get in on the ground floor. But it's not all upside. Public companies have to be super transparent with their finances, and for investors, there's always the risk that the share price could drop and you could lose money.
So that leaves us with a pretty important question to think about. Now that you've seen how it works, the potential rewards, and the real risks, would you invest in an IPO? If you are liking the content, don't forget to subscribe. It motivates us to keep posting.